The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the 11th day of March. My pleasure to be here Monday through Friday in market times, market days that is. And thank you for 3 great hours that we've just had here at TFNN. Hope I can add another one. Today being Wednesday, we've got Larry Pesavento coming on. Of course, that's going to be very, very interesting. Nice call that Larry gave recently on that downturn. And I suspect that almost everyone here at TFNN is on the short side of the market, or at least looking at it negatively. We are, at this particular point, seeing something that it's a phenomenon that I've discussed many times here. My subscribers know about it to my opening call. And I mentioned it when I showed this chart this morning of the June ES. This is the E-mini S&P June contract. Went to a 33.75 low at 5:15 last night. And was it? Yeah, last night. And then has run all the way through to a high of 2044.75 and has now retraced it all and gone to a lower low today. Very important phase we're at right at this moment. In the that's the 120-minute chart. In this daily chart, we've gone all the way from the low of, let me just move this out a little bit, right there, from this most recent low of 1963.50 made in the 16th of January, and we've gone to a peak A, B, C, D. What does that mean in the Chapman wave methodology? We always look for at least a D and then expect that there could be a sharp retracement of the rally, or it could recycle higher. It's a very important phase, that fourth highest peak. Well, this is going to be very important. Now, I'm going to discuss it in a moment, but first, let me just say the Chapman wave inside wedge, the pink line there, that dashed line, and this horizontal support at 2013.75. Let me type that in. 2013.75. That's going to be very important. We've got a left side, right side price time match to that level, and that could take, well, it could be sooner than that, but it should be at least by the 19th. 19th would be, I haven't got my calendar up here. Now, what is the 11th? So 8 days, by a week from tomorrow. I think it's going to be way earlier than that, that we at least get towards that level. But whether we take it out or not, of course, we've got to allow for that 20 points, that's 200 points in the Dow, that kind of time frame. Today's bounce was projected by an indicator that I developed quite some time ago. I call it the Chapman Wave Trend Gauge. It's based on Richard Arm's short-term trading index. Has absolutely nothing to do with the index. Just happens to do with some numbers that it comes up with. And to me, what's very important is yesterday it flashed a yellow light that said there should be probably overnight, either within 2 days, either last night or the next night, within 2 days, there should be a move of 7 to 9 E-mini points, S&P E-mini points, that should translate into some upside movement in the overall market, in the cash S&P, but in the Dow and the S&P and the general market. Well, we've had that, and it's pathetic after a 300-plus point decline. But yeah, this is very interesting. We've just changed the pattern. If you look at this chart right here of the Dow, trading up 30 at 17,694, having hit this morning 17,731. So far, that is not a very strong bounce. Look at the sandwich effect. Look, strong down candle. That's what I call the Chapman wave Roman candle. Inside bar. Take it out, go to a lower low. Strong down candle. Inside bar. Strong down candle. So far, the low of 17,662.94 has not been taken out today. Are we going to have another little sandwich effect here? If we don't, we're going to take out the low and actually start to test this pink dashed inside Chapman Wave inside wedge support line, and today would be at 17,600. So we've got to, that's quite a way down here, so we've got to be real careful watching this play out. And now let me move on. From that, I'm just going to, as I call out the numbers, the Dow right now is up 31 at 17,694. It's made a base in this level of 17,685 to 17,600. That is a very important right from that low bar of the 9th of February to the doji, long-legged doji of 17,603 made on the 4th of February. Very important support. You can see the stochastics getting to a level where it might try to start flattening out. It's at 19%, having been up in the 95, 96. Was it even at 97? I think it was. 96.32, 96.13, 96. Yeah, unbelievable. Oh, 98, 98.53 and 97.93, the two moving averages. That has to be amazing. That's almost like it's like a record, because it doesn't happen very often for the stochastic to get so close to 100%. So now what we're looking at is the opposites happening. You've got a down mode in the daily Dow chart. You're way into a sell mode in the, oh, look at that, into the 120-minute chart, and it's in leg D, and it's trying to make this level right here some kind of support at 17,684. We'll see what happens. Let's just move it away, and you'll see that the Dow, oh, if it wasn't for that peak C in the S&P, it would have been very nice. But we've got a D in the Dow, and that has every reason to think that we will not make 18,289 this week, and therefore we will have a peak D in the weekly chart. The S&P, SPX.X. So the resistance for the Dow is somewhere in the 17,790 to 17,830s. That's going to be the resistance. Now what we're doing is trying to form some kind of little doji candles. The day's young, not even 2 hours into the first session of Wednesday, the morning session. So we've got, it's underneath the Chapman Wave support level, that dashed line. Even more important about, so let me just sum up. The Dow is in a sell mode in the daily. I have no signal yet in the weekly, because I have to wait for an entire week. I have to wait for Friday at 4 o'clock before I can see that the candle is complete, and then I can make some kind of a judgment. Intra-week, I can do a whole bunch of things, but if you start to call a particular candle as completed before the time is up, whether it's a 1-minute chart or a 1-month chart, believe me, that's a big mistake. Wait for the candle to complete, and then it's best even to wait for the opening of the next bar, because if the next bar for me in the Chapman Wave touches the previous high, it continues that leg. If it touches the low, it continues that direction. So here we go. S&P, very important to hold, because 2041s is really, that was the target. It went to 2040.74. It's trying its best to struggle. See the on-balance volumes trying to turn. The MACD's trying to turn at 13%. It too was up in the 96, 97% area. That is huge for the stochastic to turn like that. And look at the beta. Look at the difference between the green line, the faster moving average, the 9-period differential, and the slow red line of the MACD. That is saying it's going to take a little time for it to flatten out. So that's that. And now the weekly chart says, yep, the weekly chart made a peak C, unlike the Dow, which is squeaked to a leg D, and we have to wait for the entire week. You don't. You can already say it's a peak C, and we're watching very closely, because at any point, if 2030, let's be safe, 2028, on the S&P weekly chart is taken out on the close, you've got to anticipate that that's going to be a failure, that we're going to test the low of this bar here of the week of February the 6th to the 1980.90 level. And the monthly chart, of course, we have to wait for the full month. But so far, this is an F/B in the monthly chart. And the MACD is starting to turn down, and the stochastic still at 85%, and that's very good. Now let's go to the comp index. I had a couple of questions about this, and I'd love to deal with it right now. The question was, what wave count do I have? And I thought it was a D. I thought I'd been through this scrupulously, that the high of this 26th of February in the composite, the NASDAQ, very broad NASDAQ composite index, at 4989.11 had a lower high bar on the 27th. No. It was 14 cents higher. So that 14 cents is higher than the previous leg. But everything about the MACD, the stochastic, the on-balance volume, the 120-minute chart, which made a peak F, I believe. Yep, a peak F top right there. Everything about it suggested that it was coinciding with the Dow and the S&P and that there should be a pullback. And if I look at it, even now, I'm inclined to put the red C right there to say that that's Chapman Wave Phantom Peak. And what I often do is whenever I do this, I explain it, because it's no use just doing these things arbitrarily. There has Chapman Wave Phantom, and it can only be in certain circumstances. There is a rule, and I do not fuzzy up that rule. Right there. I do not make it fuzzy. It is just really clear. It has all the characteristics of a peak, and it's confirmed when you finally get your D, because that would have been a C minus, because I mean C, but possible C minus. When you finally get that turn, you get the 120-minute chart plus other characteristics that are very important, and that says that I can put in a leg D. Now that's history. It's over the water over the dam. I like to make it as clear as possible, and that's what I'm doing. And if I go to the NDX 100, I'm doing the same thing. Now there were two bars that were like that. There was the high of this 25th of February at 4461.11. Then it went to 446.381. That's a little high. And then 63.81 goes to 64.32, less than a point or just about a point. I'm prepared to accept that those three little peaks over there basically said I can use a Chapman Wave Phantom Peak right there as well. So that says to me, yes, it's looking back in 2020 hindsight, wonderful. But you know what? The QQQ series did what I wanted, and that went from 108.94 to 108.91. And that was the third ingredient to say, yes, it was a peak D. So it's really the issue of the weeklies. There's nothing I can do, no matter how I count it. I still get peak C in a number of weekly charts. Just the D's got, the Dow has got the D. Let me just run the numbers now so that we can go through this in a little bit more detail as we move through the show. Also want to show something here that's once again in Boston. Look, gold, you remember that pattern that I spoke about? And now it's getting closer and closer to the left side. Look, you know what? I'm not going to rush through this. I'm going to show this chart as we go to the break. Right there. Lost. All right, I'll be back. I'll be back straight after these messages.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and I wanted to show this. I had it already. I just mislaid it on my desktop there. A landmark with room for improvement. Once glamorous Park Plaza Hotel gets a $95 million renovation by Taryn Luna in the Boston Globe this morning. When the Statler Hotel, now the Park Plaza, opened in 1927, it was the largest hotel in New England and the first in the country to offer in-room radios. For decades, the Union property was the epicenter of Boston's democratic political scene, frequented by presidents from Franklin D. Roosevelt to John F. Kennedy, who sat under baccarat crystal chandeliers at events in the hotel's opulent Versailles-style ballroom. But over time, travelers complained the historic property had descended into what one called hotel hell. And it goes on. And now they've got this whole thing with the modernization of the Whiskey Park bar. It's called now the Strip by Strager Eatery. And you got a picture here of the chandelier and the whole opulence of the ballroom. I have to tell you something. I wanted to show it. I will try to show it tomorrow. Why? Because it shows a bit of history from 1927. Maybe I'll do it during the break, and I'm gonna show you. I will do it in the break. I really think it's important. Why? Because we are documenting all the time. Actually, I'm not even documenting because I have no history of it. I just keep showing it to my subscribers and to your listeners. I don't need to have it as a documentation. To me, it's just an ongoing series of events that will culminate with something that is just going to be the penultimate indication that we're making a pretty major top, and then the ultimate, what it is, it's one of those things, I recognize it when I see it, at least I hope I will. So I'll put this out here because, within another 30 seconds, I will have forgotten already that I was about to do it during the break. So let's do this. Gold. Remember I spoke about this, the commoditization that is going all the way through yields to commodities. And it's because of the very strong dollar. It's because of many other things, but it's also because of the very strong dollar, as well as the Japanization of our bond yields. Now, I would not be surprised if there's enough turmoil over the next 3 to 6 weeks for the Fed to actually stall and they're all ready to do something with rates, but I bet they stall. And one of the reasons is there's a little fear out there because things are happening that they didn't anticipate to the extent that it's happening, and the result is surprising to them. That's my contention. Where's gold going to? Well, I've been looking for a long time to this low bar of 1,088.17, the continuous contract, somewhere around there, but it's the low of February of 2010. And that only comes into focus if the doji candle of 1132.30 that was made in November of 2014 is taken out. So you take out 1132, make it, let's just say you go underneath, you're going to the 1120s, and all of a sudden that low bar, I should type it in. I don't want to keep, I don't like typing it in because the price is always moving because it's a continuous contract. So it's about 1088. Okay. Now, the main thing is, I don't know if this is the move that takes gold down to 1,016, the 200 period moving average, or it's later. And I have been expecting that based on the, let me move this away now, that's gold trading at minus 11 at 1149, with the weekly chart making just another H pattern, lowercase h pattern. Looks like it's I've been talking about this, I don't know for how long. I thought that we're going to go to a leg D. As soon as we got that ugly bar, I said, 9-period moving average is really important. We might start trading underneath it to produce yet another of these H patterns, H, lowercase h, the arch formation, and another one. This is the one that's the most serious because the bar that takes out the low, in this case the low of the week of November the 7th at 1132.30, has to be the bar that bounces back, because if it doesn't, it starts to look like what was I looking at the other day? Starts to look like the crude oil chart. Remember crude oil? I said a 1-to-1 to the downside is a possibility. In this case, I wouldn't say exactly 1-to-1 from the July 2008 peak D high to the February 2009 low, but it would be that taken to there and down from that peak F. We've got a break coming up. Hopefully, I'll be able to get that Boston Globe front page up. It's really important to look at, and I will be right back. Dow's up 49, S&P's up 281. Be right back. We look at the dollar, we look at bonds, we look at a bunch of things.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we're getting that Chapman Wave Trend Gauge reading that says that there should be some upside movement in the S&P cash. And the Dow, we're up 62 in the Dow at 17,725. We're up 4 at 2,048 in the S&P. You've got gold down 10, silver down 29 cents, high-grade copper down 1.5 at 2.62. Crude oil is down 47.70, and bonds right now, the TLT is up 12 cents at 126.40. Let me just show you the picture. So here we are. It actually doesn't have the one that I really wanted, which shows the chandelier and all that stuff. It has the makeover of the fancy part, the strip by Strager. Eatery has replaced the Whiskey Park bar over there. Not my kind of taste. Anyway, that's not the point. The point here is that's that story I just read to you. Now, new owner Sunstone Hotel investors in the middle of a massive $95 million lobby-to-roof renovation to transform the outdated property into a modern hotel with historic charm. This is the part that is really important. It goes down into Industry experts say hotels are booming because more people are traveling to Boston, from business travelers in the flourishing biotechnology and technology industries to university-bound guests and convention visitors. An influx of international tourists is also arriving at Logan Airport. I must say, Logan has improved tremendously over the years, last couple of years. Occupancy rates in Greater Boston climbed to 75%. You should the rates are unbelievable. Average daily rates hit 176.84. That's average, up from 7% from the year. You're trying to get something in downtown Boston for 174. Analysts expect the hotel market to continue to perform at record levels. Oh, I love this. I see this every cycle. We've got to expand. We've got to go to 5,000 hotel rooms. As long as I've been here, that's just been the story. And whoops, you got to be careful for the next recession. So here's 1927. When it was being built, maybe this is 28 because it was, it was opened in 27. So there it is. Look at the traffic jam in Park Square. This could be today. Well, the car's just a little bit different. They're a little bit boxy. No, wait a minute. We've got the SUVs. They're not that boxy. So here we are. Look how people are dressed, how nice they all got jackets. Men have hats. The fashion. I think we're going back to hats. Remember? This is the irony of bad times is that people dress up in bad times and they dress down in good times. Look at Mark Zuckerberg. Look at the way this is one of the wealthiest young person in the world, and he dresses in a T-shirt. When in history has that happened? Well, actually, probably it happened with Nero. He had his nice long-sleeved T-shirt. This is a fascinating period. So let's keep going. So that's the 1927 period. And let me just show you something else here. Whoa, look at this. This is the main lobby. Not that attractive. It was being built, so. Soprano. Boston's elite flocked to the hotel's glamorous opening gala, wowed by the Spanish Renaissance motif, gold leaf coffered ceilings and floor tiles. Oh, the hotel was built by Ellsworth Milton Statler, one of America's first hoteliers and a developer known for the state-of-the-art amenities. Boston's elite flocked to the hotel's glamorous opening gala, wowed by the Spanish Renaissance motif, gold leaf coffered ceilings and floor tiles imported from Spain. The radio system broadcast the evening's entertainment, 4 orchestras and performances by a soprano and quartet. Are we not going into that same era right now? Huh? There was a ball, I just didn't get to go to it. I was invited. I'm not invited. I could have gone to it just in February. But it's very similar to this. It's an amazing period. So let's get out of this. It's enough already. And let's just complete and say that this could be the dollar, but it's not. It's CRMD. CRMD is Core Medics Inc. And the question I had from Martin was, does the Chapman wave confirm parabolic moves? Can't call in, but in case you can discuss, review wave action in CRMD for March 2015. Thank you kindly, Martin. Martin in Ottawa. So Martin, yes, absolutely. Let me just double check that wasn't a peak. 35. Great. Let me show you something. Here's the monthly chart, and all I do is I put in my up arrow. I can put the up arrow in because I know that it's the low. I can see visually. In real time, it's not that easy to do. A, B, C, D. And you get your sharp D, but the MACD didn't close negatively, and the stochastic did pull back, and suddenly you got the strong up spike, which I'm calling E right now. Let's go to the... whoa, this is going to be interesting. Let's go to the weekly, 154, 90 through 98. All right, so then this has to be called leg A, leg B, and leg C, and we're in D. I'm just going to say to you right now, CRMD is trading at 8.90, down 25 cents. It's making a little doji candle. I don't have time. I don't know if I have another break. Yep, I have another break. I'll try in the next break just to double check that I've done the waveform correctly. I'm almost sure that we've got 2 Ds, a D in the daily, a D if there's no new high today. A D in the daily with a high bar of 9.48, having come off a major low down in the 1.3 area. And the weekly chart is in leg D and the monthly chart is in leg E. If you're along this position, my advice to you, you don't have to just jump into exactly what I'm saying, but my looking at this chart briefly is saying that there's a really good chance that the upside could go a little higher, but out of the risk reward, I would say if you've got a profit, if you've been in it, I would take a good chunk of my profits off right now. If it goes higher, that's a bonus. If it goes lower, it could very quickly go to 755 or 676. Why would that be a problem? Because on a percentage basis, you'd be giving back between 8 and 12 or 15% very quickly if it suddenly dropped. And I don't see 15% on the upside from here. Unless you grab it quickly, because this is very quick and it's starting to show momentum with the on-balance volume. Stochastic's really good at 93%. MACD's good. So I'm going to say to you, you will figure out how much. Take something off. You can keep the rest. I would absolutely have a stop on a good chunk at about 8.11, between 8.11 and 8.12. And I would also say that if it makes a new high above 948 and you have taken some off, then what I would do is raise my stop. My thinking is that this is not a move that's going to be sustained and that it should come back over the next 2 weeks. If I'm wrong, it just keeps going high. If you want to keep a little portion, hey, I think that's fine. What I'm saying is this is the period of the most risk to reward. Risk being operative, reward being, I would say reward is there. But unless something spectacular is happening, and I want you to just look at it on a longer term basis, this is the first decent move to the upside. Something great is happening here. Must be a biotech stock or something. So I would advise you to try to keep a little bit as a reward, to take some off as a reward, and I'd keep some as a reward because you identified this correctly. Keep it and let it go. So now I wanted to do two other things. I'm not going to be able to do them. Well, I had a quick question about my trend gauge. I don't give out the numbers. I decided a while back I spent just too long doing my own analysis and everything. I'm not going to just blurt out numbers to give to people. They're my own proprietary numbers, but the technique itself I always discuss for the Chapman Wave trend gauge. Sorry about that. And there was another question, blurry. We're trying to work on that. Okay, we're going to go to Brent in Martinez. Brent, how are you?
I'm doing just fine, Basil. How are you today?
I'm well, thank you.
I'm calling about, I think it's the only stock I'm actually long. I have long inverse stuff like the TZA and BXX, but
okay.
Mobileye, I'm calling about Mobileye, which I bought. It had that little hammer candle put in at the bottom.
Yes.
Bought that next day before it had the big gap up, so I'm in at 33. It seems to be very strong. Even with down moves, it's still hanging tough. So I just wanted your opinion, please.
I'm so pleased you brought this one up because it was on my list to keep following, and I sort of lost track of it when it started to go down. I thought, okay, it's an IPO. It's going to need time. Just take it off your radar until something shows up. And you showed up to point it out to me. I think that after holding the 9-period exponential moving average, Mobileye, and I can't remember what the heck they do. Are they the ones that benefit if GoPro does well, right?
I think it has more to do with like the backup cameras on cars and that type of stuff. Yeah.
Thank you for reminding me about that. I must do a little bit more research on it because I was trying to find the one that I read just recently that has a direct link to the automobile industry, and I think you've just pinpointed it for me, so I must write that down. MBLY. Okay, so it's trading right now at 39.96, up $1.08 in a market that's kind of wishy-washy, and it's been doing that, ignoring the general market downturn. I think you timed this perfectly. What it's going to try to do, both in the 32-period exponential moving average in the weekly chart and the 200-period moving average in the daily chart, one is at 39.94, the other's at 40.74. It is attempting to get there. If we can even touch that, just tag it. That says that the 26th of January high of 42.48 will become a magnet. First of all, the 200-period moving average has to become a magnet as the price goes to it, comes back, goes over it, comes back. It might hang around you for a little bit. But once it touches it, it says that if Mobileye can start to trade above 41, even for 2 sessions out of 3, that 42.48 high of the 26 really becomes a magnet on the upside. The support is at 37.49 to 37. I'm not sure it's going to do that just yet. I think it's going to try to tackle the upside a little bit more. The biggest concern I would have is if this is just for some reason it's a kind of a news-related thing. The news fizzles, the momentum fizzles, and you can see it had huge volume to the downside, but now it's having equally strong volume to the upside, especially with the gap. There must have been a news-related thing on the 5th of March. I like the action. I think you got in perfectly. What I am going to suggest to you is this is one that you might not be looking to take some profits, but to see whether it pulls back, holds between 38 and 37.5, and then starts to make another move as if it wants to make another leg higher. Then I would add to that position that you have as a core position, treat it as a core position, and treat the next one as a trading position, because it's really important. If this thing takes out 42.48, the high of the week of the 30th of January, all of a sudden the weekly chart really starts to improve. That might be the kicker that it needed to start a pretty decent move. So, hey, congratulations. Nice entry.
Thank you, Basil. You answered my other question, because that was going to be it. If it were to pull back, where it would be a good re-entry point. So thanks for that.
Okay.
As always, thanks for your help. You're always a great help, and just have yourself a great day, okay?
You too. Thank you very much for calling. I appreciate it. Thanks for bringing it to my attention. Now, let's just do this. I wanted to continue with, let me just quickly check. Okay. We're about to go to a break. And as we go to the break, I had some questions about the dollar and about the euro and about, here we go, and about bonds. So look at the dollar. This particular move, the strength, the power is for traders who are long the dollar and long the UUP, which is the trading vehicle to the dollar. This is a fantastic move because I've got it as leg B, but I have to, because of the power and the strength, I'm going to be a little conservative here. I'm going to call it F/B, and I'm doing it for only one reason. The stochastics at 96, MACD is huge on the upside. But when I look at my 120-minute chart, it's broken out. So this is ABC. This is probably leg C. Should go to a D. Everything about the 120-minute chart says that by about Thursday afternoon, we could see a pullback in the dollar. Everything about it says that it should be leg B, because it corresponds, EUR, USD, it corresponds to the move on the downside that could perhaps be a D in the euro, but in fact, I've got it as more like a D/B, and it's just relentless. I don't see any strength in the euro at this particular time. So I have to favor that the dollar has a little bit more upside. And here was the kicker for me when I did this morning. The USD JPY has gone to leg D, possibly making a peak D here. But the way it snuck above, let me show you, 121.838 was the high of the week of December the 12th. 121.838, and the high now is 122. So we've snuck above the previous high. This is that inverted Chapman wave H formation, the drop bucket formation. The opposite of the H formation is like an inverted Y, lowercase y, backwards. And that says this is the period where you got to be very careful that there isn't a double top in the USD JPY, which would be hinting, because it's kind of gone together with the dollar, that it's just a hint to say, watch the dollar now, because it's becoming a little bit, not a little bit, it's becoming overbought. But the technicals are what we're going to watch very closely. I'll be back and we'll talk a little bit about about bonds and what happened with that gap, island gap from yesterday's low. I'll be back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. Yes, of course, Larry comes up straight off me. Should be a great show, as always. Just great shows right through today at TFNN. And let me just give you something here. Al, my wonderful engineer, he has just sent it over. On May the 14th, 1928, the doors of the magnificent Emboyd Theater opened in Fort Wayne, Indiana. Built as a movie palace and vaudeville house, the Emboyd provided a majestic backdrop for the entertainment of the day, complete with a Page Theater pipe organ. The Emboyd came complete with a 7-story, 250-room Indiana hotel wrapped around the north and west sides of the theater. Clyde Quimby, theater operator, had commissioned A.M. Strauss and John Eberson to design the embroidered in the Indiana hotel. What are they doing? They have just, I don't know if they've completed it yet, a major renovation. 2005, 2006 Embassy Theater project included, and goes on. And yeah, so that's just, it goes to my story that there's a period, and it's such an important period because it allows a regeneration of these buildings that otherwise would be falling apart and be lost to forever for the next generation. Yes, it's important, but it also tells us a bunch of things. Why 97, 28 were all these things happening? Because economic conditions after the war and all that coming into that period of the 1920s just started to see a flourishing. Yep, the jobs were still tough to get, but in fact, the markets started to scream higher. And that's the most important thing, the match of the markets. So let's go on here. The TLT has an island reversal to the upside. The Lehman 20-year T-bond, I spoke about it yesterday, and it's holding today. It's at 126.62. I see a bounce, and I'm going to draw this in here, and I think that bounce could be a little bit stronger as the market consolidates. I think it's the market's going to consolidate all the way into April. That's what I'm looking at right now, and we'll see what happens. And it's just real simple. The Dow breaks to new all-time high. The consolidation's complete, and we are going higher. But if it starts to break down, Dow goes in that 17,600 to 17,500 area is really important in my work as support for the Dow. And of course, the VIX is up a little bit today. But if the VIX starts to get back into the high teens and then into the 20s, we'll see this market go much lower. That's the way I'm looking at it. Now, let's just do this real quickly. The TBT, which I spoke about the other day, I said for my subscribers, we were right there. I said, I think we're going to get a leg D. Didn't know that we'd spiral up to 47.54. Now the TBD is given, that's the inverse of the TLT, an island reversal, but to the downside. That implies that it's going to take a lot of work to get for the TBT to get to 46.11. It's at 44.83 right now. So those are the parameters I'm watching. If the TBT takes out the 47.54 high in the next 2 weeks, that would say that the TLT is starting to suffer, and that we'd be looking at, remember this chart that I showed? There's the 30-year T-bond yield right there, peak B. I believe we're going to make a peak B in all of the yields, and then we're going to see how does it or does it get to leg C. Look at iShares Global Timber and Forestry ETF, peak E. Look how far we've fallen. This is a very critical period for this particular ETF. It's actually an ETN, I believe. It's an iShares ETF. And here's the Philadelphia sector housing, and it's pulled back. It's not a big deal. It's holding the rising wedge formation. What happens with the rising wedge formation? Very often you get this kind of pattern, a little a cup pattern. I always think of Statue of Liberty standing there holding the torch, and that's the arm coming out. All right, well, that's just my imagination. Okay, we're about to wrap up. Have a wonderful day, and I will see you tomorrow. I'll see you tomorrow at 8, because 8 Eastern Time, I'll be doing a show for John Logan, and then I'll be back at my normal time at 11 as well. So have a great rest of the day, and check out my opening call. I think you'll find it very interesting. Onward with Larry Pesavento.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.